welcome. We're at the FT Festival of Finance. We have just finished a seminar by The Banker on social impact investing. And to discuss this further, I'm joined by Fiona Reynolds, who is the Managing Director of Principles for Responsible Investment, which is a UN-supported organization that seeks to bring their investor signatories on board with principles that will ultimately lead to a more socially responsible investment strategy market-wide. Thank you very much for joining us, Fiona.
Thanks for having me.
So first of all, I know you're very keen on the labeling that is used when we talk about socially responsible investment. The panel was discussing impact investing per se. We discussed social impact bonds, green bonds as well. But you're saying that sometimes these definitions pigeonhole these specific debt instruments and make probably the market forget the bigger picture, which is that long term we shouldn't even be talking about socially responsible investment, but just investment as a whole. What do you think about that?
Sure. So I think that what happens is that there can be small amounts of money that are then allocated to things with the label. It's a green product, it's a socially responsible investment product, and then everyone can walk away and think that they've done their social good and they're feeling very good about themselves. But it forgets about the fact that there is trillions and trillions and trillions of dollars that are out there, and we actually need, I think, all money to be invested in a way that takes into consideration the environment, that takes into consideration society as a whole, and that rewards good governance, rewards companies that are and investments that are well run. And so again, while I support green bonds, I do want to see the whole fixed income market, for example, think about ESG factors, not just say it's okay that we've got this little tiny allocation over there. Otherwise you can see an investor who goes and puts some money into something that they consider good, and that might be this tiny part of the money they've got to invest, but with the rest of their money they could actually go and do a whole lot of harm.
Which counters it out in a way.
More than counters it out. So our focus at the Principles for Responsible Investment is to get really all institutional investment thinking in a long-term way. And if you're thinking long-term, not short-term, then you have to think about these externalities that are going to affect your investments over the longer period.
And what kind of role can the asset holders themselves play? And when we talk about also the kind of push that this mind shift is going to create, you also need to have the big institutional investors backing this. What kind of change can asset holders bring?
Well, I think asset owners can make an incredible amount of change, because at the end of the day, it's the asset owners who are mainly investing pension money on behalf of us all, and they're trying to match liabilities for someone over a 60 to 100 year time horizon. So thinking about what the returns are today and tomorrow isn't really that impactful when you're thinking about 100 years and you're paying out money over that time period for pensioners. So because they've got a different mindset, and there is now starting to be more and more money in large pension funds around the world, when they instruct their investment managers, they can instruct them to invest money in a different way and to think about the long term rather than just a period of 90-day cycles. So again, I think that they can really change the way capital works and that they can really change investment markets over the long period, and that's why we very much focus on asset owners at the PRI.
And in terms of PRI's work, this year it's the 10th anniversary. In terms of the next 10 years, I know you're already putting in place a plan in terms of specific objectives. Based on the achievements you've done so far, what are your key plans for the next decade? Yeah,
so PRI turned 10 this year. We have a really great headline figures, like the fact that 62 trillion in assets under management have signed the PRI. But that doesn't mean that all of those 62 trillion are invested in a sustainable way. So one goal is to see all of that money invested sustainably. We also want to see deep ESG integration. So at the moment, people talk about that they're considering ESG factors, but it's not deeply ingrained into all of their investment processes. So that's another role for us. And the other is really to be able to measure impact of what we do. So I think we've spent the first 10 years raising awareness about the need to consider environmental, social and governance factors. And I think we've slowly started to win that argument. But now we need to say, well, what does all of this mean and how do we measure impact? And you know, I really think that we need capital to be deployed in a way that means that money is productive and that it does benefit society as a whole. And we've also seen a couple of very big things that have happened over the last 12 months. So one is the Paris Climate Agreement and the other is the UN Sustainable Development Goals. And these are things that have been agreed by countries around the world. But if we're going to meet the targets that have been put in place by the Paris Agreement, or if we're going to meet the Sustainable Development Goals, they need financing. Without the investment of the new technologies we need, of the new energy sources that we need, none of these are going to happen. And so again, it's the investors, private investors, as well as governments, but governments can't do it alone, who will make the difference. And so that's a big focus for us as well. How do we get capital moving into the green economy and to the sustainable economy?
Perfect. Well, thank you very much for joining us, Fiona, and good luck with your next 10 years.
Thank you very much and happy 90 years.
Thank you.